Hello learners, welcome to the session of Indian financial system. It is a topic in Indian financial system. I Dr. Priyank Sharma from School of Management Studies, Swami Rama Himalayan University welcomes today you in this session. We will explore the structure, purpose and significance of the Indian financial system in driving the country's economic growth. So, the Indian financial system is a critical framework that channels the savings into investments and simultaneously ensuring the productive use of funds. It plays a vital role in supporting capital formation. So, the capital formation is a concept that we will understand later on, which means building the infrastructure, industries and business necessary for the economic development. Additionally, this system enhances the economic stability, providing a sort of mechanism that helps the individuals, businesses and the government to manage the money efficiently. It involves various components such as financial institutions, financial markets, financial instruments and the regulatory body also. So, one by one we will talk about these all things, and finally now we will discuss the key functions of the financial system. That means what we can say that what are the functions which are performed by the financial systems. So, the major components, how they interact, and some of the latest innovations that are reshaping finance in India today. So, we will discuss these all things one by one. So, coming to the features of Indian financial system. So, let us start with the features of Indian financial system. So, Indian financial systems have the various features. We will discuss few of them. So, the key features of the Indian financial system is, first, it is a crucial pillar. So, it is a crucial pillar that supports our country's economic development. First point is that means it is a crucial pillar which supports the economic development of the nation. Okay. So, the Indian financial system plays an important role in the economic development of the country by bringing together the savings and the investments. The second feature is that it acts as a backbone of channelizing funds from those people that who have access funds, they can be named as savers, to those people who need those funds like businesses and entrepreneurs. So, the process or this process boosts production, employment and overall economic growth of the country. Second feature what we can say of the Indian financial system is that it encourages both savings as well as investments. That means system is something like that which encourages both savings and investment. The system provides, or the financial system provides, a wide range of financial products and financial services like bank accounts, mutual funds, insurance and pension schemes, which not only mobilize household savings but also guide them toward productive investments. So, there are various types of products by which these savings can be mobilized into the investment. The third feature that the financial system is that links savers and investors. That means it is a sort of platform which meets the savers and the investors. This is done through financial intermediaries like banks, mutual funds and stock exchanges. So, these institutions act as a bridge, ensuring that funds are moved efficiently from those who have it and to those who can use it profitably. Fourth feature of Indian financial system is that it helps in capital formation. So, it helps in capital formation. How? How it can help in capital formation? That is by converting the savings into the investments. So, the financial system facilitates the creation of new businesses, infrastructure and industries. So, capital formation is a process of long term economic sustainability. So, what we can say that capital formation is also a product, or we can say facilitated by the Indian financial system. The next feature of the financial system is like that it helps in allocation of risk. That means financial markets and financial instruments such as derivatives and insurance enable individuals and firms to manage risk better. Investors can diversify their portfolios and businesses can hedge against uncertainties, which promotes the stability in the economy. So, these are some features, and finally we can say that the financial system facilitates the expansion of financial markets. Okay. With continuous development and integration of markets, more people gain access to financial services. So, both in urban as well as rural areas, it also encourages innovation in the financial products and services. Okay. So, these are some features of the Indian financial systems by which we can, what we can say, categorize, what we can say, identify. So, we can say that the Indian financial system is not just about money. It is a dynamic framework that supports the economy by encouraging savings, mobilizing the investments, managing risks and expanding financial reach. So, this is about the introduction of Indian financial system. Slowly and steadily we will come up with the different areas of Indian financial systems, like we can have the components of the systems. Okay. So, now coming to the next area. So, we will now coming towards a closer look at the key functions of Indian financial system. So, till now we talked about the features, now we are coming to the functions of the Indian financial system and try to understand how each plays an important role in supporting the country's economic framework. So, let us go through them one by one. So, first function of Indian financial system is mobilizing the savings. So, how they mobilize the savings? The financial system encourages people and institutions to save and then channels those savings into the productive investments. This helps in generating the capital for businesses and infrastructure and thereby fueling the growth. Second function is allocation of capital. So, how it allocates the capital? It ensures the efficient distribution of financial resources across various sectors of economy. This means capital flows to the areas where it is needed most and can generate the highest return. That means that is what the second one, allocation of capital. Third is facilitating the payments. So, this Indian financial system also facilitates the payment. How? It is a core function of financial system and which is to enable smooth and secure transactions, whether it is business, individual or the government. Everyone relies on the financial institutions to process the payments reliably. Next function which is performed with the financial system is the managing of risk. Managing of risk, how they manage the risk? Through the instruments like insurance and hedging function. Hedging function is the securing of the risk. The financial system helps protect individuals and organizations against financial losses, ensuring more stability in investment and business activities. Thereafter, the next one is providing the information or various set of information. So, in this function, the system or the Indian financial system acts as a information hub by spreading market data, economic trends and financial analysis. This supports better decision making by investors, businesses and policy makers. Next function which is done by the financial system is the promotion of growth. Ultimately, all the above functions which we described yet now, functions combine together to promote the economic expansion and ensure the stability of the overall economy by supporting investments, employments and innovation. The financial system drives long-term development. So, we can see that the financial system is not just about banks, money. It is actually the backbone of the functioning economy. So, that is it all about the functions of Indian financial system. Now, coming to the next concept, that is what we can say, that components of the Indian financial system. So, what are the various components of Indian financial system? Let us see. So, these components constitutes of markets, products, institutions, etc. So, it is a crucial part of the Indian financial system. These institutions, the first one is institutions. Institutions play a vital role in mobilizing savings, allocating capital, managing risk and ensuring the overall health of our economy. So, let us talk about these all four components of the Indian financial system. The first one is banks. So, the first and most familiar component, we all know that is the banks. So, banks are the cornerstone of the financial system, serving both individuals as well as businesses. So, we can broadly categorize the bank into private sector banks and public sector banks. So, private sector are those banks which are owned and managed by the private entrepreneurs, and the public sectors are operated by the government. The examples of these private sectors and public sector banks are, like we can say that the State Bank of India and Bank of Baroda, these are the examples of government banks. Okay. So, and the private sector banks which are owned by the private entities like Housing Development Financial Corporation, that is HDFC Bank, ICICI, that is Industrial Credit and Investment Corporation of India Bank. Thereafter, private and public, some more categories of banks are there like foreign banks. So, what are these foreign banks? The banks which are headquartered overseas, that is their headquarters is not in India but operate branches in India, such as Citibank or HSBC. So, these are some foreign banks. Thereafter, some rural cooperative banks which are set up to cater to the financial needs of rural communities, especially farmers and small scale entrepreneurs. So, banks perform essential services like accepting deposits, providing loans, securing or issuing credit and debit cards and enabling secure payments. So, they are regulated by the Reserve Bank of India or RBI we commonly name as, which ensures their sound functioning. So, thereafter NBFCs are also there, that is non-banking financial corporations. So, these are the various types of institutions which are the part of Indian financial system. So, these are non-banking financial companies. So, it is the second major category commonly known as NBFCs. So these NBFCs perform similar activities as banks. There are some key differences. They do not hold banking licenses and cannot accept demand deposits like savings or current accounts. NBFCs are specialized in their areas as loan or asset finance companies. For instance, vehicle loans, home loans and equipment financing. NBFCs can be investment company, that is non-banking financial companies can be investment companies which manage portfolios and invest in stocks, bonds and other securities. And microfinances institutions can be there which provide small loans to low income individuals or groups, often in rural or underbanked areas. Okay. So, NBFCs are especially important in reaching out the sectors, which sectors that traditionally banks might overlook. That means which are not catered by the bank, thereby enhancing financial inclusion across the nation. So, these are some NBFCs. Thereafter, next type of institutions are insurance companies in the Indian financial system. As we know that the insurance companies are the companies which actually takes or mitigate the risk and provides the protection against the financial risks. These institutions plays a key role in managing risk by offering various types of insurance. So, various types of insurance can be life insurance, general insurance. These are the various categories. In general insurance, a broad category of the insurance are also there. So, life insurance companies can be there which provides or offers policies to provide financial security to a person's family in case of death. Okay. On the other hand, non-life insurance companies, that means which not insure the life but insure the products, policies and products, assets, these all things. So, it is also general insurance companies. So, which cover assets and health such as motor insurance, health insurance and property insurance. And they also provide the reinsurers. Reinsurance providers are also there which insure the insurance company themselves. So, reinsurance help distribute large risk across multiple companies and improving financial stability in the sector. We can say that reinsurance companies are those which are not the face of the insurance companies, but they usually distribute the risk of the insurance companies when they are going for the large proposals. So, insurance companies encourage long-term savings, provide a safety net and promote a sense of economic security. Thereafter, the next one in the Indian financial institution is the mutual funds and the pension companies. Finally, we can say that mutual and pension funds are those which focus on asset management and retirement planning. Okay. So, mutual funds are the pool of money from multiple investors and invest in various instruments like stocks, bonds and market tools, that can be money market as well as capital market. So, they offer an easy way for individuals to invest even with small amounts and enjoy professional management. Okay. Thereafter, pension funds on the other hand are long-term investment vehicles which regulated by the authorities. These authorities can be the Pension Fund Regulatory Authority and Development and Regulatory Authority PFRDA. So, these funds help build a retirement corpus and ensuring financial stability in the old age. Both mutual and pension funds are essential for the purpose of capital formation and they offer individuals an opportunity to grow with wealth over time. Okay. So, we can say that now the features, the functions of the financial instruments, and there are various types of financial instruments which are the components of the Indian financial system. So, these financial institutions are the backbones of the economy and ensure liquidity. NBFC's extended reach and flexibility, insurance company manage risk, and mutual fund and pension funds promote long term investments and retirement security. Together, these all institutions create a stable, inclusive and effective financial environment which is a critical for the country like India aiming for the sustained growth. So, this is all about the introduction, functions and the institutions of Indian financial statement. In the next session, we will talk about some more topics. Thanks for today.